Question 1. What is the primary difference between short-term disability insurance and long-term disability insurance? A short-term disability insurance covers disabilities that last for less than 2 years, while long-term disability insurance covers disabilities that last for more than 5 years. B. Short-term disability insurance provides income replacement for a limited period, typically 6 months to 2 years, while long-term disability insurance covers income replacement for extended periods, sometimes until retirement age. C. Short-term disability insurance covers only partial disabilities, while long-term disability insurance covers total disabilities. D. Short-term disability insurance provides a higher percentage of income replacement compared to long-term disability insurance. Answer: B. Short-term disability insurance provides income replacement for a limited period, typically 6 months to 2 years, while long-term disability insurance covers income replacement for extended periods, sometimes until retirement age. Explanation: the key distinction between short-term disability insurance (STD) and long-term disability insurance (LD) lies in the duration of the benefit period. STD typically covers shorter-term disabilities that result in income loss for a few weeks to a couple of years, often from 6 months to 2 years. LTD, on the other hand, provides coverage for much longer durations, sometimes continuing until the individual reaches retirement age or becomes able to return to work. This distinction is crucial for planning the appropriate coverage for individuals in different situations. Florida statutes and regulations. Short-term disability generally provides more immediate coverage, while long-term disability ensures financial support for extended periods. This difference is reflected in how premiums and benefit structures are designed for each type of policy. Question 2. In Florida, which of the following statements about disability insurance claims is correct? A. A disability claim can be approved based on self-reported symptoms without the need for medical documentation. B. Insurers are required to review a disability claim within 60 days of receipt, with a possible extension if additional documentation is needed. C. An individual's eligibility for disability benefits is solely based on the income level at the time of application. D. An insurer is not allowed to deny a disability claim if the claimant is working part-time while receiving benefits. Answer: B. Insurers are required to review a disability claim within 60 days of receipt, with a possible extension if additional documentation is needed. Explanation: in Florida, disability insurers are obligated by state law to review a claim promptly and communicate decisions to the claimant within 60 days. If additional documentation or clarification is required, this time frame can be extended, but the insurer must inform the claimant about the delay. This regulation ensures that claimants receive timely processing of their disability claims, allowing for better financial security during the disability period. Florida disability insurance statutes. Florida mandates the claim review period to protect consumers, ensuring that claims are not unduly delayed. Claim documentation. Proper documentation, including medical records and proof of disability, is essential for the approval of a claim. Self-reported symptoms alone do not suffice. Question 3. Scenario-based. Mr. Rodriguez, a 45-year-old accountant, has recently been diagnosed with a chronic back condition that has severely limited his ability to perform his daily job functions. He works in a sedentary role and has been advised by his doctor to avoid prolonged sitting or standing. His employer offers group disability insurance with a 30-day elimination period and a 60% income replacement benefit. Mr. Rodriguez is wondering if he will qualify for disability benefits. What should he do next? A. He should immediately stop working and submit a claim to his insurer without informing his employer. B. He should continue working until his condition worsens, then submit a claim for long-term disability benefits. C. He should file a disability claim after the 30-day elimination period and provide all necessary medical documentation to support his claim. D. He should request that his employer adjust his work schedule or job duties to accommodate his medical condition instead of filing a disability claim. Answer: C. He should file a disability claim after the 30-day elimination period and provide all necessary medical documentation to support his claim. Explanation: Mr. Rodriguez's condition is impairing his ability to perform his job, which makes him eligible to file a disability claim. Assuming his disability insurance policy covers this type of condition, he must provide medical documentation from his doctor detailing the severity of his condition and the impact it has on his ability to perform essential job functions. Elimination period. The elimination period is the waiting period before benefits begin, which in Mr. Rodriguez's case is 30 days. This means he needs to file his claim after the 30 days have passed, not before. Income replacement. His insurer will likely pay 60% of his income for the period he is unable to work once his claim is approved and the elimination period is over. Medical documentation. A claim will not be approved without sufficient medical evidence that supports the diagnosis and disability. Options A, B, and D are incorrect because Option A, immediate cessation of work without following the proper procedure will delay the claims process and may result in a denied claim. Option B, continuing to work until the condition worsens might make the situation more difficult as the claimant must show that the disability is severe enough to warrant benefits. Option D, while accommodation is an option, it does not negate the need for disability benefits if the condition severely limits job performance. Question 4. Which of the following is an example of a typical exclusion found in a disability insurance policy? A. Disability resulting from an accidental injury during recreational sports activities. B. Disability resulting from a self-inflicted injury or attempted suicide. C. Disability caused by a car accident while commuting to work. D. Disability caused by a pre-existing condition that was disclosed during the underwriting process. Answer. B. Disability resulting from a self-inflicted injury or attempted suicide. Explanation. Most disability insurance policies include exclusions for certain types of claims, and self-inflicted injuries or suicide attempts are commonly excluded from coverage. This exclusion is in place because the insurance is designed to protect against unforeseen or accidental disabilities, rather than those caused by intentional actions. Florida disability insurance statutes. Florida allows insurers to include such exclusions to prevent fraudulent claims and moral hazard where individuals may intentionally harm themselves to access benefits. Pre-existing conditions. Pre-existing conditions may lead to limited coverage or exclusions depending on how they were disclosed during the underwriting process, but are not typically fully excluded unless specified. Question 5. Which of the following best describes how a residual disability benefit works? A. It provides benefits based solely on the total amount of income lost due to the disability, regardless of the individual's ability to work. B. It provides partial benefits if the insured is unable to perform some but not all of their job functions with an income reduction formula applied. C. It is paid in full until the insured is able to return to work without any restrictions. D. It provides benefits to individuals who are unable to work because of a mental illness. Answer. B. It provides partial benefits if the insured is unable to perform some but not all of their job functions with an income reduction formula applied. Explanation. Residual disability benefits are designed to help individuals who are not completely disabled but are still unable to work at full capacity if the insured is able to work part-time or perform some duties, but not all. The policy will pay a partial benefit, usually calculated based on the income lost as a result of the disability. Benefit calculations. The income replacement is often calculated by comparing the individual's pre-disability income with their post-disability income, with a formula determining the percentage of income lost. Florida Disability Insurance Guidelines. Insurers in Florida must provide clear definitions of residual disability benefits in the policy documentation, including how income reductions are calculated. Question 6. Scenario-based. MS Turner, a 32-year-old dentist, has been diagnosed with severe carpal tunnel syndrome. The condition affects her ability to perform delicate dental procedures, which require fine motor skills. She has purchased disability insurance that covers both total and partial disabilities. Her insurer applies an occupation rider to the policy, which means benefits are paid if she is unable to perform the duties of her specific occupation. After missing several weeks of work, MS Turner wants to file a claim. What is the next step she should take? A. She should immediately submit her claim to the insurer without waiting for further medical treatments or evaluations. B. She should continue working through the pain and file a claim only if her symptoms become worse and force her to stop working entirely. C. She should file a claim, providing medical evidence from her doctor and detail her inability to perform the specific duties of her occupation. D. She should attempt to transition to a different role within her practice before filing a claim. Answer. C. She should file a claim, providing medical evidence from her doctor and detail her inability to perform the specific duties of her occupation. Explanation. Under the WON occupation rider MS Turner is covered for her inability to perform the essential tasks of her occupation, dentist. To file a claim, she must submit detailed medical documentation from her healthcare provider that outlines how her condition prevents her from performing those tasks. This will enable the insurer to assess her eligibility for benefits. Own occupation rider This rider ensures coverage for individuals who cannot perform their specific job functions, even if they are capable of working in another capacity. Florida disability insurance regulations. In Florida, insurers must clearly define the terms under which such riders are applicable and ensure that medical documentation is submitted to validate claims. Question 7. What is the typical role of a waiver of premium rider in a disability insurance policy? A. It allows the insured to increase their benefit amount if their disability results in higher medical costs. B. It suspends premium payments if the insured becomes totally disabled, but the policy remains in force. C. It reduces the premium amount for the insured if they are diagnosed with a serious illness. D. It allows the insured to extend the term of coverage beyond the normal policy limits. Answer. B. It suspends premium payments if the insured becomes totally disabled, but the policy remains in force. Explanation. A waiver of premium rider is a common feature in many disability insurance policies. This rider allows the insured to stop paying premiums if they become totally disabled, while ensuring that the policy remains active and the benefits continue. This helps to prevent policy cancellation due to non-payment while the insured is unable to work. Florida disability insurance policies. Waiver of premium riders is typically applied in the event of total disability, and the insured does not have to worry about maintaining premium payments during a period of incapacity. Additional benefits. While it does not increase the benefit amount or change coverage terms, it does ensure the policyholder's financial security in case of disability. Question 8. What is a key factor in determining eligibility for long-term disability insurance benefits? A. Whether the insured has sufficient medical documentation proving the severity of their condition. B. Whether the insured is able to perform light duties at their job. C. Whether the insured's occupation is classified as high risk or low risk by the insurer. D. Whether the insured is working part-time while receiving treatment for their disability. Answer. 8. Whether the insured has sufficient medical documentation proving the severity of their condition. Explanation. To qualify for long-term disability insurance benefits, the insured must demonstrate that they are unable to perform the essential duties of their job due to a qualifying disability. Sufficient medical documentation is essential to substantiate the disability claim, as it helps the insurer assess the extent of the condition and its impact on the insured's ability to work. Eligibility criteria. Medical records and evaluations play a central role in determining eligibility for long-term disability benefits. The insurer requires evidence that the disability is serious and likely to prevent the insured from working for an extended period. Florida disability insurance requirements. Florida insurers follow strict guidelines to ensure that claims are properly documented and meet eligibility standards, especially for long-term disabilities. Question 9. Which of the following statements about disability insurance benefits for self-employed individuals is true? A. Self-employed individuals are ineligible for disability benefits because they cannot provide sufficient income documentation. B. Self-employed individuals typically receive a higher percentage of their income as a disability benefit compared to salaried employees. C. Disability benefits for self-employed individuals are calculated based on their net income and business expenses. D. Self-employed individuals must purchase disability insurance through their employer to qualify for benefits. Answer. C. Disability benefits for self-employed individuals are calculated based on their net income and business expenses. Explanation. For self-employed individuals, disability benefits are typically calculated based on their net income from the business, which is the income after deducting business expenses. This is because self-employed individuals do not have an employer providing wage records, so the insurer looks at income tax returns or other financial documents to assess the individual's income level. Self-employed disability insurance. Self-employed individuals need to provide thorough financial records, such as tax returns, to verify income, and benefits are based on net earnings rather than gross income. Florida disability insurance rules. In Florida, insurers offer policies that are specifically tailored for self-employed individuals, considering their unique income structures. Question 10. What is the primary function of an elimination period of each disability insurance policy? A. It is the waiting period before a policyholder can receive any benefits. B. It is the time of after disability occurs when the insurer can assess the severity of the condition. C. It is the period during which the insurer can deny a claim if the disability was caused by a pre-existing condition. D. It is the period when the policyholder can continue to work before filing a claim. And so A. It is the waiting period before a policyholder can receive any benefits. Explanation: the elimination period is essentially the deductible for a disability insurance policy representing the waiting period after the disability occurs before benefits are paid. The length of the elimination period can vary based on the policy and typically ranges from 30 to 180 days. This period helps to ensure that the disability is long-term and prevents short-term absences from being covered. Florida Disability Insurance Regulations. In Florida, policies commonly offer elimination periods ranging from 30 to 90 days depending on the terms chosen by the insured. Question 11. Which of the following is generally not covered by a standard disability insurance policy? A. Disability resulting from an accident. B. Disability resulting from a mental illness. C. Disability resulting from substance abuse. D. Disability resulting from pregnancy complications. Answer: C. Disability resulting from substance abuse. Explanation: many disability insurance policies exclude coverage for disabilities resulting from substance abuse, as insurers consider it preventable and related to lifestyle choices. Mental illnesses and pregnancy complications may be covered depending on the terms and the state in which the policy is issued. Florida state regulations. In Florida, policies can have specific exclusions, including those related to substance abuse, unless specified otherwise in the policy. Question 12. Scenario-based. John, a 40-year-old contractor, has been diagnosed with a debilitating back injury that prevents him from performing physically demanding tasks. His disability insurance policy includes a residual disability rider. He is still able to perform some light-duty tasks at work, but his income has significantly decreased. How will his benefits be affected? A. John will receive full disability benefits because he is unable to perform all aspects of his job. B. John will receive partial benefits based on the income lost due to the disability. C. John will not receive any benefits because he can still perform light-duty tasks. D. John will be eligible for benefits only if his back injury results in total permanent disability. Answer: B. John will receive partial benefits based on the income lost due to the disability. Explanation: under the residual disability rider, John is eligible for partial benefits because his condition has resulted in a loss of income even though he can still perform some duties. The benefits will be proportional to the income lost due to his disability, rather than providing full benefits for total disability. Florida Disability Insurance Guidelines. Florida insurers are required to provide clear terms for residual disability riders outlining how partial disabilities are covered. Question 13. What does an own occupation rider allow a disability insurance policyholder to do? A. Allows the insured to receive benefits only if they are totally disabled and unable to perform any job, not just their own occupation. B. It allows the insured to receive benefits if they are unable to perform the duties of their specific occupation, even if they can work in a different job. C. It reduces benefits if the insured can work in a related field. D. It extends the benefit period if the insured cannot perform basic activities of daily living. Answer: B. It allows the insured to receive benefits if they are unable to perform the duties of their specific occupation, even if they can work in a different job. Explanation: an own occupation rider provides coverage for individuals who are unable to perform the specific tasks of their job, even if they are capable of performing other types of work. This rider is particularly important for those in specialized occupations, such as surgeons, who may be able to work in other roles but still need financial protection due to their disability. Florida disability policies. In Florida, an own occupation rider is often added to policies for professionals in specialized fields, ensuring they are covered if they can no longer perform their specific job duties. Question 14. Which of the following would be a reason to include a cost of living adjustment COLA rider in a disability insurance policy? A. To increase the premiums over time. B. To adjust the benefit amount for inflation and maintain purchasing power. C. To provide higher benefits for disabilities caused by illness rather than accidents. D. To extend the benefit period if the insured's disability lasts longer than expected. Answer: B. To adjust the benefit amount for inflation and maintain purchasing power. Explanation: a cost of living adjustment COLA rider is added to a disability insurance policy to ensure that the benefits increase over time, typically in line with inflation. This helps maintain the purchasing power of the benefits if the insured is disabled for an extended period. Florida disability insurance riders. Many Florida disability policies offer the option of a COLA rider to help policyholders cope with the rising cost of living during a long-term disability. Question 15. How does a partial disability differ from a total disability in terms of insurance coverage? A partial disability coverage provides benefits for any level of disability, while total disability coverage only provides benefits for severe impairments. B. Partial disability coverage is for individuals who can still perform some job duties but at a reduced capacity, whereas total disability is for individuals who cannot perform any job duties. C. Partial disability provides benefits for temporary disabilities, while total disability is for long-term impairments only. D. Partial disability is not covered under standard disability insurance policies, whereas total disability is always covered. Answer: B. Partial disability coverage is for individuals who can still perform some job duties but at a reduced capacity, whereas total disability is for individuals who cannot perform any job duties. Explanation: Partial disability covers individuals who can still perform some of their job duties but have a reduction in income due to their disability. Total disability covers individuals who are unable to work at all due to their condition. Partial disability usually provides a percentage of the benefit depending on how much income is lost. Florida Disability Insurance Guidelines. Florida policies often have distinct clauses for partial and total disability detailing the benefits for each scenario. Question 16, scenario-based. Sarah, a 29-year-old teacher, is involved in a car accident and breaks her leg. She has disability insurance, but the policy has an exclusion for injuries caused by high-risk activities. Is Sarah likely to be eligible for benefits? A. Yes, because car accidents are not considered high-risk activities under most disability insurance policies. B. No, because the exclusion for high-risk activities would apply regardless of the cause of the injury. C. Yes, as long as the car accident was not caused by her own negligence. D. No, because all injuries resulting from accidents are typically excluded from coverage. Answer: A. Yes, because car accidents are not considered high-risk activities under most disability insurance policies. Explanation: In most cases, a car accident is not classified as a high-risk activity unless the insured was engaging in reckless behavior, e.g. street racing. As a result, Sarah is likely to be eligible for benefits unless her policy specifically excludes injuries from car accidents. Florida disability exclusions. In Florida, insurers may include exclusions for high-risk activities such as skydiving or extreme sports, but car accidents are generally covered. Question 17. What is typically required for an insurance company to approve a claim for disability benefits? A. Proof of employment with a current employer. B. A doctor's note verifying that the insured is unable to perform their job duties due to a qualifying disability. C. Evidence of financial hardship due to the loss of income. D. A written statement from the insured's family confirming the severity of the disability. Answer: B. A doctor's note verifying that the insured is unable to perform their job duties due to a qualifying disability. Explanation: To approve a disability claim, insurers generally require medical documentation from a healthcare provider that confirms the disability and how it impacts the insured's ability to perform their job duties. This is a critical step in the claims process. Florida claims process. In Florida, disability insurers often require medical records, such as doctor's notes and diagnostic tests, to substantiate the disability and approve benefits. Question 18. Which of the following statements about group disability insurance is true? A. Group disability insurance typically provides coverage for higher amounts of income than individual policies. B. Group disability insurance premiums are typically higher for employees who are older or have pre-existing health conditions. C. Group disability insurance coverage is often guaranteed regardless of the employee's health status. D. Group disability insurance benefits are usually taxable regardless of the policyholder's tax bracket. Answer: C. Group disability insurance coverage is often guaranteed, regardless of the employee's health status. Explanation: Group disability insurance is often guaranteed issue, meaning that employees do not need to undergo medical underwriting to qualify for coverage. This makes it an attractive option for those who may have pre-existing health conditions. However, the coverage limits and benefits may be lower than those of an individual policy. Florida group insurance regulations. Florida's regulations require that group disability policies be offered with a guaranteed issue, regardless of the participant's health. Question 19. What is the typical purpose of a return of premium rider in a disability insurance policy? A. It allows the insured to receive a refund of premiums paid if they never file a disability claim. B. It increases the amount of monthly benefits after disability occurs. C. It covers the cost of rehabilitation or vocational training after a disability. D. It refunds premiums paid after a specified number of years, regardless of the claim status. Answer A. It allows the insured to receive a refund of premiums paid if they never file a disability claim. Explanation: a return of premium rider allows policyholders to recover the premiums they have paid if they do not file a claim during the policy's term. This feature is typically available for a higher premium cost but offers peace of mind if no claim is made. Florida disability policies. ROP riders are available in some Florida policies, providing an option for policyholders who want the possibility of recovering premiums if they remain healthy and do not need benefits. Question 20. Which of the following is typically a key feature of a short-term disability (STD) insurance policy? A. It provides benefits for disabilities lasting up to 2 years or longer. B. It covers the cost of medical treatment for illnesses or injuries. C. It provides benefits for disabilities lasting a few weeks to a few months, typically up to 6 months. D. It provides full salary replacement for a period of up to 12 months. Answer: C. It provides benefits for disabilities lasting a few weeks to a few months, typically up to 6 months. Explanation: short-term disability (STD) insurance provides income replacement for a limited period, usually between 3 to 6 months, following an illness or injury that temporarily prevents an individual from working. It typically replaces a portion of the income, such as 60% to 70%. Florida STD regulations. In Florida, STD policies generally cover periods up to 6 months, with benefits that start after a waiting period, usually 1 to 14 days. Question 21. What is the purpose of a waiting period in disability insurance policy? A. Is the time an insured must wait before their policy becomes effective. B. It is the time between filing a claim and receiving the first disability benefit payment. C. It is the period the insurer has to investigate a claim before making a payment. D. Is the waiting time to qualify for a higher benefit amount. Answer: B. It is the time between filing a claim and receiving the first disability benefit payment. Explanation: the waiting period, also known as the elimination period, is the time between when a disability occurs and when benefits begin. It is essentially a deductible for the policy, and it may range from a few days to several months depending on the policy. Florida waiting period guidelines. In Florida, waiting periods for disability claims typically range from 7 to 30 days depending on the policy terms. Question 22, scenario-based. Megan is a 35-year-old teacher who has been diagnosed with a chronic illness. She is still able to perform light duties, but has lost income due to her inability to handle her full workload. She has disability insurance with a partial disability rider. How will her benefits be affected? A. Megan will not receive benefits since she can still perform some job duties. B. Megan will receive partial benefits based on the reduction in her income. C. Megan will receive full disability benefits for her condition. D. Megan will need to apply for long-term disability benefits. Answer: B. Megan will receive partial benefits based on the reduction in her income. Explanation: a partial disability rider allows Megan to receive benefits if she is unable to perform her full duties due to illness, but still works in a reduced capacity. The benefits will be proportionate to the income she loses because of her illness. Florida regulations. In Florida, disability policies that include partial disability coverage help individuals like Megan who are still able to work but have reduced earning potential. Question 23. Which of the following best describes total disability in most disability insurance policies? A. The insured is unable to perform any job duties, even if it's not their own occupation. B. The insured is unable to perform any job duties for a certain period of time. C. The insured is unable to perform the duties of their specific occupation. D. The insured is permanently incapacitated with no possibility of returning to work. Answer A. The insured is unable to perform any job duties, even if it's not their own occupation. Explanation: total disability typically means that the insured is unable to perform any work at all, not just the duties of their own job. This is the most restrictive form of disability, and full benefits are paid as a result. Florida definitions. In Florida, total disability definitions in policies often specify that the insured cannot work in any occupation for which they are reasonably qualified. Question 24, scenario-based. David, a 48-year-old accountant, experiences a major health issue and can no longer work in his profession. However, he is able to perform other types of work with lower pay. David has a disability insurance policy with any occupation coverage. How will his benefits be determined? A. David will receive full benefits because he cannot work as an accountant. B. David will receive partial benefits if he takes up another job, even if it pays less. C. David will receive benefits only if he cannot perform any job at all. D. David will not receive benefits because he can work in other occupations. Answer: C. David will receive benefits only if he cannot perform any job at all. Explanation: under any occupation coverage, David must be unable to perform any job for which he is reasonably qualified, including those outside of his current profession, to qualify for full benefits. This definition is more restrictive than own occupation coverage. Florida disability insurance policies. Florida policies with any occupation clauses provide benefits only if the insured cannot perform any job suited to their skills, experience, and education. Question 25. Which of the following does guaranteed renewable status in a disability insurance policy mean? A. The policyholder is guaranteed that their premiums will remain the same for the life of the policy. B. The insurance company cannot cancel the policy as long as the premiums are paid on time. C. The policyholder can increase their benefit amount each year without medical underwriting. D. The insurance company will guarantee coverage regardless of changes in the policyholder's health. Answer: B. The insurance company cannot cancel the policy as long as the premiums are paid on time. Explanation: a guaranteed renewable policy means that the insurer cannot cancel the policy or refuse to renew it as long as the premiums are paid. However, the insurer may adjust premiums based on the policyholder's age or other factors depending on the policy terms. Florida disability insurance regulations. Florida laws require that guaranteed renewable policies must specify when and under what circumstances premiums might increase. Question 26. What is typically the effect of a Social Security disability offset (ICA) disability insurance policy? A. The policy will pay benefits to supplement any Social Security disability benefits the insured receives. B. The policy will pay benefits equal to what Social Security disability benefits would provide. C. The policy will reduce its benefits by the amount of Social Security disability benefits received. D. The policy will terminate benefits if the insured qualifies for Social Security disability. Answer: C. The policy will reduce its benefits by the amount of Social Security disability benefits received. Explanation: a Social Security disability offset means that the insurer will reduce the amount of disability benefits they pay by the amount of Social Security disability benefits the insured receives. This prevents the insured from receiving a double payment for the same disability. Florida policy guidelines. Florida disability insurance policies may have an offset provision that reduces benefits if the insured qualifies for Social Security disability. Question 27. Scenario-based. Ellen, a 42-year-old nurse, sustains an injury that prevents her from working full-time in her usual capacity. She qualifies for disability benefits, but her policy has a vocational rehabilitation rider. What benefit will this rider provide? A. It will pay her full disability benefits while she remains off work. B. It will help cover the cost of retraining or re-education to return to work in a different occupation. C. It will allow her to take time off work for medical treatment without affecting her disability benefits. D. It would extend her benefit period if she is unable to return to her previous job. Answer: B. It will help cover the cost of retraining or re-education to return to work in a different occupation. Explanation: a vocational rehabilitation rider assists policyholders in covering the cost of retraining, education, or job placement services if they need to switch careers due to their disability. This rider is useful for those who are capable of working in a different capacity. Florida vocational rehabilitation coverage. Florida policies with vocational rehabilitation riders typically assist in covering the costs of job retraining or career counseling. Question 20. Which of the following is a typical exclusion in most disability insurance policies? A. Injury resulting from an accident. B. Disability caused by a pre-existing condition. C. Illness resulting from hospitalization. D. Disability caused by a car accident. Answer: B. Disability caused by a pre-existing condition. Explanation: many disability insurance policies have an exclusion for disabilities caused by pre-existing conditions, meaning that the insurer will not pay benefits if the disability is a result of a condition that existed before the policy was issued. Florida pre-existing conditions exclusion. Florida law allows insurers to exclude disabilities caused by pre-existing conditions, though there may be some exceptions depending on the policy's terms. Question 29. Which of the following would be covered under a business overhead expense BOE disability insurance policy? A. The owner's personal medical expenses. B. The lost income of the business owner during a disability. C. The ongoing operating costs of the business while the owner is disabled. D. The salary of the business owner's employees during a disability. Answer: C. The ongoing operating costs of the business while the owner is disabled. Explanation: a business overhead expense (BOE) policy is designed to cover the fixed operating costs of a business if the owner becomes disabled and cannot work. This includes rent, utilities, and employee salaries, but not the owner's lost income. Florida business insurance (BOE). Policies in Florida are often used by small business owners to maintain their operations while recovering from a disability. Question 30. Which of the following is typically true about a waiver of premium rider in a disability insurance policy? A. The insured must continue paying premiums until they recover. B. The insurer waives the premiums if the insured becomes totally disabled and meets specific criteria. C. The insurer increases premiums after the insured becomes disabled. D. The insured must pay premiums in advance for the first year of disability. Answer: B. The insurer waives the premiums if the insured becomes totally disabled and meets specific criteria. Explanation: a waiver of premium rider allows the insured to stop paying premiums if they become totally disabled and meet the policy's criteria for disability. The premiums are waived for the duration of the disability, ensuring that the coverage remains active without further financial burden on the insured. Florida waiver of premium rider. In Florida, the waiver of premium rider is common in disability policies and ensures that the insured's coverage continues without the need to pay premiums while they are disabled.